Oil India. The company reported an operationally weak set of numbers for the second quarter. The revenue declined by about 1.5% sequentially, but the profit after tax climbed by about 25% as it was also aided by higher other income. Ranjit Rath, who's the CMD of the company, now joins us to discuss the quarter gone by, but more importantly, the outlook going ahead as well. Currently, the stock doing extremely well, largely on account of increased oil prices over the last couple of trading sessions as well. Thanks a lot, Mr. Rath, for joining in. You know, the first obvious question is your production target. What were, the volumes that you did in the second quarter, and what's your target for the remainder of this year?
First of all, thank you very much and good morning to all your viewers. As you would all note that we have done well in terms of our Q2 results and H1. As far as the volume is concerned, we have registered about 5.5% growth in terms of crude oil production when we compare H1 to H1. And in terms of Q2, it is about 4.79%.
Right. Mr. Rath, we'll request you to just hold on to that line and we'll come back to our conversation, because right now he's back to the conversation that we are having with the management of Oil India. Mr. Ranjit is still with us. Apologies to keep you waiting, sir, but you were giving us some production details. You've said that 4.79% is what you've seen in terms of growth production quarter on quarter. 5.5% was the production higher by this year on year. But that's short of your guidance of around 9 to 10% for the full year, right? So if you could give us a sense of what's your guidance for the remainder of this year in terms of production?
In terms of, first of all, thank you very much. In terms of production, we are looking at about 5.5 to 6% growth, riding on the wave that we are doing right now. And of course, we are also looking at some sales improvement, which has been more or less 4.5% growth this year. I mean, this first 6 months.
All right. Hi, Mr. Rath. Good morning and good to speak to you. This is Nigel on this side. 5.5 to 6%. That's for the full year.
Yes, that's what is the plan.
In both segments.
In both the segments.
Got it. All right. The oil production ramp up. If you could help us out with an absolute number, I think last year it was around 3.4 MMT. And you,
I would put it in a manner that last year we did highest ever production in terms of oil and gas in total, 6.53 million metric ton oil and oil equivalent. And this year also we are on track to register a similar kind of number.
That will be higher by 5.5 to 6%, right? In comparison of what you did last year.
Actually, see what happens. Oil India manages good reservoirs which are having potential. So we do a lot of reservoir management to ensure that we sustain the momentum of growth despite the decline in production. So we are looking at a number around that.
All right. We take that point. One of the reasons why the stock has been doing well over the last couple of days also is a bit of a spike that we've seen in oil prices. Closer to $75 per barrel is what we are at right now. I just wanted to understand what your realization is at oil prices of $75 per barrel. And have you heard anything on the scrappage of windfall taxes?
Windfall taxes, you all know that it is with a threshold of $75 per barrel. So since now the oil price is below that, so there is no windfall tax. But I have no clue about the proposition that you were talking about. As far as our realization is concerned, considering the fact that there has been some drop in the oil price, we are hovering around $80 to $82 per barrel.
But will you be continuing to, get realizations upwards of $75 per barrel? The street is worried that maybe once it crosses that, then the windfall tax comes again.
See, what I would like to focus and then share with the viewers is we would continue to outperform our performances in terms of our physical contribution and physical growth, which is under our control. So we would always attempt to produce more and add more exploration acreage to our portfolio.
Since we're talking
price points will be controlled by the global market. So we would focus on our physical performance.
All right. Since you're talking about realizations, sir, what about gas realizations? What were they in the first half of the year and last quarter?
I'm sorry, I could not get that.
Gas realizations. What were they in the past quarter, in the first half of the year? You gave us
I don't have that number right now.
Okay, all right. Maybe the next time you could help us out with that. But let's focus on the Numaligarh Refinery. You know, their capacity was expected to double or triple, I think so. When is that expansion likely to come on stream? And what kind of impact will it have on GRM, sir?
Okay, Numaligarh Refinery is getting tripled from 3 to 9.
Yes.
And we are looking forward to complete that particular project by end of 2025, the calendar year, December 2025, which would also include a 1,640 kilometer of pipeline from East Coast to Numaligarh. And in terms of GRN, what has happened is we were doing about $13 per barrel. So that was last year. This year, this first 6 months, we have done about 4.5. Now, the question is, because there is a very limited margin available in terms of the cracks, this has been the scenario. But going forward, we are hopeful that situations will improve.
All right. Final question then. When will IGGL come on stream? It was supposed to come on stream in August, if I remember. It's been pushed to the fourth quarter. Is it still on track, or do we see further delays here? And what's the capex that you're putting in out here?
See, IGGL is actually emanated from the hydrocarbon, Northeast hydrocarbon region, where 5 companies are in stake, having stake in terms of 20% each. And phase 1 of IGGL, we are looking at by mechanical completion by end of this year.
All right. And how much money are you putting in this?
At an equity level, it's about, from Oil India point, it's about 250 crore or.
Got it. Okay, all right, Mr. Rath, we appreciate you joining in, wishing you all the best for the second half of the year. And we look forward to chatting up with you at some time of this quarter or at the end of the third quarter.
Thank you very much for having me.
All right. For the time being, we slip into. All right.